Good evening, ladies and gentlemen. This is Joe Kinahan with your weekend report, going for starting for Monday, March 17, 2008. So, of course, happy St. Patrick's Day, as you can see with me hat. I'm wishing all my friends a happy St. Patrick's Day this weekend. Now, let's talk about some serious stuff to do with the market. Friday, very, very bad day. Bear Stearns, I don't even want to say joke, but we spoke all week about these Bear Stearns 30 puts. The stock trading last Tuesday closed at 62. The 30 put trading 65 cents. And we were like, this doesn't seem to make sense. The skew was incredible, meaning that how the puts were trading in relation to the calls. We talked about how they had 168 front month volatility. Really, everything seemed out of whack. Lo and behold, what happened on Friday? Those same 30 puts that we spoke of closed on Friday at $6.10. The front month implied volatility in Bear Stearns, 487. This is crazy stuff. Friday felt almost like a crash, and I don't want to panic and say that, but it was that type of trade. It was panic type trade and that down move that we saw on Friday morning. Now, this all being said, what do we assess for the week going forward? Let's talk about the levels we're at right now. First thing is the VIX. The most interesting thing I saw in the VIX on Friday afternoon, the stocks closed at 4 p.m. Eastern, the index is at 4:15, the options on the indexes and the futures. The VIX was trading at a level of 33 when the stocks closed at 4. At 4:15, the VIX went out at 31.16. There was a lot of people selling on the close Friday. Not that they wanted to necessarily get short a whole bunch of premium at this level, but they wanted to get short some, figuring this is a very high VIX level. Leave yourself room. If you sell some here and it does go up a little bit more, you have room to sell some more. But if it doesn't, at least you sold some at a really high level. That's a very good trade as far as I'm concerned. It's not to say it can't go higher. If it does, though, you get more at the better price. But in case it doesn't, if we have over this weekend, if we have a lot of, cooler heads prevail, shall we say, it gives you an opportunity. Again, the beauty of options, there is opportunity on the downside. We look at these levels on the S&Ps, we closed at 1293 even. Very impressive how we held in there at 1288, which is one of our big numbers for the S&P futures. We kept bouncing off 1288. If we do break through this 1288 level convincingly on the futures, I'm still a believer that we're going to go down and test this 1240 level that we saw on the Martin Luther King birthday when we were closed and we saw it electronically. However, the market was very, very firm at the 1288 level. Again, you're going to have to keep that in mind as you watch this market on Sunday night electronically, on Monday as soon as we open. That's the key level to look at in terms of the futures in conjunction with what's happening in the VIX. We have to speak about Bear Stearns again. Bear Stearns right at $30. Keep in mind, this is expiration week, not only on options, but on futures. So this is a big week. You're going to see a lot of crazy trading, which you even more so than you would normally see, I believe, on an expiration week. So keep that in mind. All right, the numbers for Monday, industrial production, and then we have some auctions on 6-month and 3-month notes. Doesn't normally seem like a big deal. This is such a skittish market. Every single bit of news all of a sudden is important. The market's almost looking for bad news. I hate to be that negative, but again, you have to keep that in mind. This market is nervous. Let's see what news comes at us over the weekend and on Monday. All right, I'm Joe Kinahan for Think or Swim. As always, thank you very much. As I said, have a happy St. Patrick's Day, good health, good trading on Monday. And here we go. We'll let you off with some Irish music today as we leave. All right. Goodbye.